All right, welcome to the Explainer. Something big is happening in the housing market. And today, we're going to break down the latest mortgage data to show you exactly what's going on and, why you should care. And it really all kicks off with this number right here. Last week, total mortgage applications shot up by a staggering 11%. I mean, that is a huge jump for just 1 week. So let's unpack what's really behind that surge.
Okay, so here's how we're going to tackle this. First, we'll look at the big picture, that initial surge. Then we'll see who's really driving this thing. After that, we'll check in on home purchases, figure out why this is all happening, take a peek at the kinds of loans people are grabbing, and then, put it all together.
So this big headline comes straight from the Mortgage Bankers Association, or the MBA. They're telling us that for the week ending February 27th, 2026, mortgage applications just shot up. It's a really clear signal that the market's shifting in a big way. So you might be wondering, where did this massive double-digit jump come from? Well, the main story here, the real driver, is refinancing. We're talking about existing homeowners who are seeing a golden opportunity, and frankly, they're jumping all over it.
And you can see it right here. It's like a new balance of power is forming. Refinances now make up almost 60% of all mortgage activity. Now, that's a pretty big jump from the week before, and it tells us exactly where the energy in the market is coming from. But wait, it gets even crazier. Check this out. The refinance index is up 109% compared to the very same week just 1 year ago. I mean, think about that. That's not just a small increase, that is a full-on boom. Homeowners are rushing to get a better deal on their loans.
And this isn't just some weird statistical blip either. Joel Can over at the MBA confirms it. He says we're looking at the strongest pace for refinances in years. And get this, he also points out that the average loan size for these refis is going up. So what does that mean? It means it's the borrowers with bigger mortgages who are really seizing this moment to slash their monthly payments. Okay, but that's only half the story. It wasn't just existing homeowners making moves. The market for actually buying new homes, yeah, that's heating up too. So the purchase index, it saw some really healthy growth. We're talking up over 6% in just a single week. And even more telling, it's standing a full 10% higher than this time last year. That tells you there's real growing demand from people looking to buy. And this really gets to the heart of why buyers are coming back. It's a perfect storm, really. On one hand, borrowing money is getting cheaper. On the other hand, there are actually more houses on the market to choose from. That's a powerful 1-2 punch that gets people interested in buying again. All right, so we've covered the what, right? We've got a surge in both refinancing and home buying. But what's the why? What's the engine driving all of this? Well, it probably won't surprise you to hear it all comes down to interest rates. And here's the crucial part. The rates didn't just drop for a second and then pop back up. No, they've stayed down, hovering near the lowest they've been in years. And that sustained period of low rates, it creates this huge financial incentive for people to finally make a move, whether that's refinancing or jumping in to buy a house.
So let's put some numbers to it. Here's a quick look at what we're talking about. The most popular loan out there, the 30-year fixed, is holding right around 6%. And for other types of loans, the rates are even lower. You can see why that's creating a really attractive environment for anyone looking to borrow.
Now, one data source is good, but it's always smart to get a second opinion, right? So let's look at some data from another company, Exactus. What they do is track credit pulls, which is a fantastic indicator of who's seriously thinking about getting a mortgage. And what do you know? Their findings line up perfectly with what the MBA is seeing. They saw their weekly volume surge to the highest point of the entire year, up over 6% from the same week in 2025. This just confirms it. This isn't a fluke. This boom in activity is the real deal, and it's happening everywhere. Okay, let's peel back one last layer here and get into the nitty-gritty. With all these people applying for loans, what kinds of loans are they actually getting? The breakdown is pretty interesting. So what's interesting is that while government-backed loans, like FHA loans and VA loans for veterans, they still make up a big chunk of the market, but their overall share actually went down a bit. At the same time, we saw a little uptick in adjustable rate mortgages, or ARMs. Now, that might mean some borrowers are willing to roll the dice a little, take on a bit more risk to lock in an even lower rate at the start. All right, so we've waded through a ton of data. What does it all mean? What's the bottom line here? Let's connect the dots for anyone who either owns a home or is even just thinking about buying one.
The big takeaway is this. This isn't just a blip on the radar, and it's not just one corner of the market that's waking up. No, this is a full-blown revival of activity across the entire market, and it's all being fueled by cheaper borrowing costs. And everybody's getting in on the action. Current homeowners and potential buyers are both responding in a really big way. So all this momentum creates what feels like a real window of opportunity, but it also leaves everyone asking the exact same question. How long is this going to last? How long will this sweet spot of lower rates and high energy actually stick around? And that, my friends, is the billion-dollar question for the housing market right now.